I made the comment before we started recording, be careful what you wish for.
Yes, yes.
When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency.
Silver is increasingly being recognized as a strategic asset, with growing attention on its role in both financial security and industrial demand. Market analyst Bill Holter has underscored the importance of the U.S. government's recent decision to classify silver as a critical mineral, a move that could restrict availability for commercial markets. This designation signals a shift in how the metal is valued, no longer just a commodity, but a resource prioritized for national security. For investors, the implication is clear. Physical silver may become increasingly difficult to obtain, while its strategic importance continues to rise. Holter points out that the ripple effects of this policy extend far beyond U.S. borders. Other nations are likely to follow suit, retaining more of their own production as industrial and strategic needs intensify. At the same time, sectors such as renewable energy, electronics, and medical technology remain heavily dependent on silver, leaving little room for substitution. With paper markets already stretched far beyond the availability of physical metal, Holter warns that delivery failures could emerge, creating systemic stress across financial markets. The delicate balance between constrained supply and unrelenting demand is setting the stage for potential volatility that few investors are adequately prepared for. The outlook, according to Bill Holter, is shaped by both extraordinary risk and unprecedented opportunity. He notes that silver has long been undervalued relative to its role in the global economy, but a decisive break above the $50 per ounce level could mark a turning point. Such a move, he argues, would not simply represent another rally in a volatile commodity, but rather the start of a revaluation process with global implications. In that scenario, speculative demand could surge dramatically, propelling prices to levels that once seemed far-fetched, $100, $200, or even as high as $600 per ounce. Now, we present the clips from Bill Holter's interview with Andrew Maguire. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, first off, let me just go back and say that I believe, and I think, tell me if you disagree or not, I believe that the contracts were originally issued, as you mentioned, to increase volatility, scare people, but also as if you want to call it a pressure relief valve on the buying of physical gold and silver. I said the same thing when GLD and SLV were created. I viewed those as pressure relief valves. I mean, they don't have to own any physical metal. They can have all contracts. And I'm going to go one step further, and don't know whether you'll agree or disagree, but I believe that the crypto market was created as a pressure relief valve from gold and silver, because they are viewed as an alternative, a dollar/currency alternative.
What you essentially were saying here is that every other central bank, every other sovereign, everyone else is going to say, well, I'm not selling my silver at this price. I want a much higher price, and I don't quite know what that is yet.
The much higher price, I made the comment before we started recording, be careful what you wish for.
Yes, yes.
When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency. In other words, no amount of currency can buy an ounce of gold. That currency won't be accepted. And that's where we're headed on a global basis. I mean, if you think that the US dollar can collapse, crack up, and the system remain running, that's not going to happen. It can't happen.
Yeah, I think this is, that's something I think when we first.
It's a giant margin call.
Yeah.
This is a giant margin call that we're looking at. It's the margin call. It's the mother of all margin calls because the entire system is going to be called. Well, there are companies that have I think, at one point, First Majestic was holding back some of their production and not selling it because silver in a vault is better than money in a bank. But the be careful what you wish for part, if we had, and I don't know what the number is, $5,000, $10,000, $25,000 gold, and I don't know what the number is on silver, but there's a number out there that implodes those markets. They no longer function as far as being able to deliver, which makes those contracts worth zero, but the ounces worth, immeasurable numbers. What that will do is it will break confidence. The entire system runs on confidence, and you'll see the system sputter. I don't believe any markets will still be open 72 hours after a failure to deliver. And if you get markets closing because everything runs on credit, then you enter the very real possibility, if not probability, of a spell where we live Mad Max world. And nobody wants Mad Max world. I mean, you could be sitting on the biggest pile of silver and it's still not going to do you any good because if you've not prepared, food wise, where your position is, can you defend that position? It's Mad Max world is something that no one, no matter how wealthy they are, no matter what they own, what they have, no one's going to thrive in that world.
We talked about this once before, Bill, and it really interested me, and it interested a lot of my friends and subscribers. I know that you have taken responsibility for yourself a long, long time ago, and you've moved yourself into a self-sustaining environment where, if you had to, you could hunt your food, you could provide your own power, water, etc., etc. And that is obviously the ultimate position. As you say, no matter how much gold and silver you got, it's going to be difficult anyway. So you need food, but I think silver would, for the people that can't, who are stuck in a town, for example, obviously we suggest to them, look, at least get out of these worthless $0 or what will ultimately be a $0 into maybe some silver coins. And at least even if you haven't got a lot of spare money, at least to diversify into gold and silver. So for those people living in a town that can't do what you can do, and obviously I would recommend people try and contact you and find out how they may do that. But what should they be doing, Bill? Because they'll be looking at this thinking, yeah, what do I do?
I believe that your current location is more important. I mean, obviously having some metal outside of the system, that's a must. Otherwise you have no money. Because when this goes down, the wealth accrual into gold and silver will be beyond what anybody, including you or I, suspect is coming. I think it's going to be far larger. But I think your location is the most important. You can't use your gold and silver if you're dead. And if you live in a city right now and the system goes down, you're dead. If you don't have a place outside of the city where you can, let's use the word hide, pull a rock over the hole and wait for the storm to clear. If you're in a city, you're dead. There's no way to defend yourself. Suburbs, it'll get there, pretty quickly. But out in the country, I mean, if you are remote, and you've done some things such as, power source, a water source, food sources, food stocked up, and a way to defend that position, you're going to last an awful lot longer, and you may make it all the way through to the other side, however long that takes. But I think your location at this point, location is the most critical decision for people to make at this point.
In recent weeks, silver has gained renewed attention as governments and industries scramble to secure resources critical to technology and energy transitions. Analysts note that the market is already showing signs of strain, with inventories on major exchanges continuing to decline. Bill Holter warns that if silver prices accelerate sharply, the financial system could face an unprecedented shock. He describes this scenario as the mother of all margin calls, where leveraged positions, paper contracts, and derivative exposures tied to silver unravel under the weight of real-world scarcity. Such a disruption, Holter stresses, would not remain contained to metals trading, but could reverberate throughout credit markets, shaking the very confidence that underpins global finance. What makes the outlook even more complex is silver's dual identity as both a monetary and industrial metal. Demand is surging not only from investors, but also from sectors like renewable energy, semiconductors, and defense, where silver is irreplaceable. Some mining companies are already signaling caution, withholding supplies to retain the advantage of physical holdings in a tightening market. This confluence of industrial necessity, government intervention, and financial stress points to a historic turning point. Holter suggests that the divergence between physical silver and paper claims is set to widen, creating a market where real ounces command a premium that traditional pricing models will no longer capture.
Yeah, well, 5% was the high. We're 4.25 thereabouts now on the 10-year, but that was the high on the move. Up from, at one point in time, I think the 10-year traded as low as 0.6 of 1%, or maybe even lower. So it's been a huge move already. And, I don't know if 5% is the number or not, but there is a number that unwinds the entire credit edifice. Because what you need to understand is that the entire world, whether it be financial markets or the real economy, everything runs on credit. And if credit becomes more expensive because it is being shunned by foreigners, how does the U.S. How does the U.S. fund a $2 trillion deficit? That's an extra $2 trillion every year that they have to borrow. And the answer ultimately is the Federal Reserve will buy those bonds, but that is outright and direct monetization. The problem that the West is in right now is it's a debt trap. I mean, in the U.S., we're paying $1.5 trillion in interest alone. You've got problems in France. You've got problems all over the world with sovereign debt. There's too much of it. How do you service it? That's why they're desperate to get yields down. But Mother Nature, market, is pushing rates higher. And that's where rates should go because there's more and more risk. There's little to no risk premium in sovereign bond yields across the globe.
And so essentially, I mean, the way that just so subscribers understand what we're talking about, so yield curve control is essentially going to flood the market with cheap money, isn't it? And so what's your hedge? What's your hedge? Global central bank gold buying is going to certainly be incentivized. What's the hedge for most people?
Yeah, well, the obvious hedge is gold and silver. And the reason being gold nor silver can bankrupt. They are money themselves. They cannot bankrupt in a world that is bankrupting.
Absolutely. And I think if we can revert back to silver for a minute, because what we're seeing here is a huge, long-awaited breakout. Obviously, we all know that China has been in the driver's seat for a long time, and they've been playing the arbitrage trade and, being in control of the physical side of the market. They could arbitrage the paper side. But essentially, what we're hearing is, hey, gloves are off now. And especially after Trump's most recent BRICS attack on the BRICS, like clearly putting the BRICS in the crosshairs with tariffs. And then most recently, some very odd statements that he made after the SCO meeting. What's your thoughts there?
Yeah, I think your comment, the gloves are off. I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into COMEX and LBMA and said, "Here's $10 billion, I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries together step up. And the Achilles heel to the Western system is the fractional reserve nature of the entire system. But the way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. So they're at the point now, like you said, the gloves are off, and money is just flowing into, whether it be the physical metal itself or even the leveraged contracts in the West. You're seeing foreign nations buy those. And you can look at a gold chart. The following day after that news came out, the price of gold started going higher. It's been like a tractor in first gear. The pullbacks, or what used to be smashes, have been very, very shallow. And here we are, we're breaking out, we're new highs on all-time highs on gold, 14, 15-year highs on silver. We're entering a new phase right now. And I think that new phase coincides with the Western bond market. Think the Western credit system is faltering. And it just makes sense. If the credit system's faltering and everything is based on credit, you want to move your assets into something that cannot bankrupt. And that's gold and silver by definition.
Silver's price action has entered a decisive phase, with the recent breakout above $42 per ounce, signaling a shift driven by fundamental strength rather than speculative trading. The move reflects tightening physical supply conditions and growing investor expectations of a dovish Federal Reserve stance, both of which are lending support to higher valuations. This level now serves as a strong foundation for continued momentum, with market dynamics pointing toward further gains. Looking ahead, the next major test lies at the multi-year high near $44.22 per ounce, a threshold that, if breached, could unlock additional upside potential. With industrial demand continuing to climb and physical markets showing signs of stress, analysts suggest silver is positioned for sustained strength in the near term. The price trajectory now carries the weight of both structural demand and monetary factors, reinforcing silver's bullish outlook as it edges toward new milestones. Could silver's latest surge be signaling the beginning of a sustained upward trend? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.